Today we are diving into the world of financial advice. And you know what makes an investment recommendation suitable for you? We're going to be taking a deep dive into FINRA Rule 2111.
Okay.
Those are the guidelines set by the Financial Industry Regulatory Authority.
Right.
And we really want to understand how these rules protect you and what questions you should be asking your broker or financial advisor.
Yeah, I think that's such a good topic because, a lot of people think suitability, it's just, this vague concept.
Yeah.
But it's not. It's very specific. And FINRA Rule 2111 really lays out, those specific criteria that brokers must consider before they're recommending any security or investment strategy to you.
So there's actual real substance to it.
Absolutely.
It's not just like, oh yeah, this seems like a good idea, we should do it.
Yeah, it's not a vague promise.
Right.
It's like, think about it this way. A good suit is tailored to your measurements.
Right.
And so is a suitable investment. It should be tailored to your financial situation, your goals, your risk tolerance, even your age.
So FINRA requires brokers to gather a lot of information before they're making these recommendations. What kind of information are we talking about?
It goes beyond just like your income and your assets.
Okay.
They need to understand your other investments, your tax situation, your liquidity needs.
Okay.
So how quickly you might need access to your money.
Right.
And even your investment experience.
Right, because you don't want them recommending, complex derivatives if you've never invested before.
Exactly.
Yeah, that would not be suitable.
It's about making sure those recommendations are appropriate for your level of understanding and your experience level. And I think another key point is that the suitability rule applies to all recommendations, not just buying.
Okay.
So even a recommendation to hold a security needs to be evaluated against your current circumstances.
So they can't just passively collect fees without considering whether holding an investment is still the right move.
Yeah, that's exactly right. So let's look at some examples from FINRA notices and cases just to illustrate, how these rules actually play out in practice.
Okay.
The dogs of the Dow strategy.
Yeah.
It sounds pretty simple, right?
Yeah.
That can still trigger suitability obligations if it's recommended without considering a client's risk tolerance.
So even well-known strategies aren't inherently suitable for everyone.
Right. They have to look at the individual investor and their needs.
Got it.
Another example is using home equity to buy securities.
Okay.
Not inherently bad,
Sure.
but it raises serious suitability concerns because it introduces leverage and potentially more risk.
Yeah, you could lose your house.
Exactly. And FINRA has actually issued alerts about this, emphasizing that brokers shouldn't be pushing clients into strategies that could jeopardize their financial stability.
Right.
Taking out a second mortgage to buy, very speculative penny stocks.
Right.
Probably not a great idea.
Not a good idea.
Especially if someone's close to retirement.
Yeah, this highlights why it's so important to ask the right questions. And to not just accept recommendations at face value.
Yeah, I think that's so important to remember that you have a voice, you have the ability to push back and ask questions.
Now let's delve a little bit into the nuances of hold recommendations, because I think this is where it can get a little bit tricky.
Yeah.
Because they don't apply in every situation.
Right.
Just because my broker isn't telling me to sell something,
right,
that doesn't automatically mean that they've considered its suitability.
Exactly. So there are situations where a hold recommendation is considered a formal recommendation under the suitability rule.
Okay.
And others where it's not.
Okay.
So for instance, if you inherit a bunch of, blue chip stocks,
okay,
and your broker specifically advises you to hold them, that likely triggers a suitability obligation.
Right.
They should be assessing those stocks within your overall portfolio and goals. But if you just keep those stocks in your account and the broker doesn't comment on them, it wouldn't be considered a formal hold recommendation.
Okay, so the distinction lies in whether they are explicitly advising you to hold on to those specific securities.
Exactly. And certain types of securities also warrant, extra scrutiny when it comes to hold recommendations.
Okay. What comes to mind?
So I'm thinking about investments with a shorter term focus or heightened sensitivity to market changes. So things like leveraged ETFs, which reset daily,
okay,
can have long-term performance that's vastly different from the underlying index.
Yeah.
Or mortgage REITs, which are highly sensitive to interest rate fluctuations.
So if my broker is advising me to hold these types of investments, I should be extra cautious and really press them on why they think that's a good idea.
Absolutely. It's crucial to understand the rationale behind those recommendations and ensure they align with your individual circumstances.
Now, this leads us to another important concept, and that is quantitative suitability. Now,
Yes.
I've heard this term before,
hmm
but for the listeners who haven't, can you explain what it is?
Yeah, so quantitative suitability is really about protecting investors from excessive trading,
Okay.
or what's often called churning.
Right.
And churning is when a broker is making excessive trades primarily to generate commissions, even if it doesn't benefit the client.
Right.
So quantitative suitability aims to prevent that, because even if each individual trade might be suitable,
Okay.
if the volume or frequency is excessive
Uh-huh.
and it doesn't align with your goals, that's a red flag.
So how do they determine if trading is excessive?
Right.
Are there like specific metrics?
Yeah, so a FINRA looks at things like your account's turnover rate,
Okay.
which is how quickly your investments are being bought and sold.
hmm
They also look at the cost-to-equity ratio, which measures how much of your portfolio's return is being eaten up by trading costs.
So if my account is constantly churning and my returns are being eroded by these fees,
Yeah.
something might be wrong.
Yeah, that would definitely warrant further investigation,
Okay.
because excessive trading can be incredibly damaging, especially over the long term.
Now you might be wondering, what's the difference between suitability and fiduciary duty?
Yeah, these are often used interchangeably.
I always get those two confused.
Right.
So can you clarify the distinction?
Yes, so fiduciary duty, it holds advisors to a higher standard.
Okay.
They must always act in your best interest,
Hmm.
putting your needs ahead of their own or their firm's profits.
So a fiduciary advisor couldn't recommend a product that earns them a big commission with a better lower cost option exists.
That's right, exactly.
Okay.
So under the suitability standard, a broker can recommend something that earns them a higher commission as long as it's considered suitable based on their assessment of your profile.
Got it.
And it's important to note that not all financial professionals are fiduciaries.
Okay.
So brokers typically are not held to that standard.
Got it.
But registered investment advisors, or RIAs, are.
Okay, so when choosing a financial professional, it's really important to understand what standard of care they're held to.
Absolutely, that's a key distinction.
So now let's shift our focus a little bit to customer advisory centers.
Okay.
While the same suitability rules apply, FINRA has raised some concerns about certain practices in these centers.
Right, and the concern is that some call centers might prioritize aggressive sales tactics over personalized advice. So they might be failing to gather all the necessary suitability information before making recommendations.
Just because they ask a few questions over the phone, I shouldn't assume they've done their due diligence.
Yeah, you always want to be cautious.
Okay.
And FINRA has issued alerts about potential issues with IRA rollovers and mutual fund switches that might be presented as like free or no fee when they could actually come with higher costs or hidden fees.
There's no such thing as a free lunch in finance.
Exactly.
So if I'm working with a broker, whether it's directly or through a call center, what are some red flags that I should be watching out for?
Yeah, that's a great question. I think a major red flag is recommendations that seem completely out of line with your risk tolerance or your investment goals. Another red flag is if they're pushing frequent trades or investments that you don't understand.
So if they're talking about, complex option strategies and I'm barely comfortable buying index funds,
Right.
that's a sign to slow down.
Exactly. And also be wary if they're not asking enough questions about your financial situation or if they seem disinterested in understanding your overall goals.
It sounds like trusting your gut is important. If something feels off, it probably is.
Absolutely. And don't be afraid to ask questions if your broker can't or won't explain things clearly. That's a huge red flag.
Now, are there specific questions that I should be asking to ensure that my broker is following these suitability rules?
Absolutely. And here are a few key questions to keep in mind. Can you explain how this investment aligns with my specific goals?
Okay.
What are the potential risks and drawbacks of this investment? Are there any other investments that might be a better fit for me? And perhaps most importantly, how are you being compensated for this recommendation?
That last one is key to understanding whether their advice might be influenced by potential commissions.
Exactly. And remember, you are in the driver's seat when it comes to your investments. Stay informed, be proactive, and never hesitate to seek a second opinion if you have any doubts.
We've covered a lot of ground today.
We have.
Everything from, the details of FINRA's suitability rule to red flags and key questions to ask. What are some big takeaways for the everyday investor?
I think one of the biggest takeaways is that navigating the world of investment advice requires more than just trusting someone with a fancy title.
Right.
Understanding FINRA's suitability rules gives you the power to ask the right questions to ensure that your broker or advisor is acting with your best interests in mind.
It strikes me that we often talk about due diligence when it comes to researching investments.
Yes.
But we need to be just as diligent about vetting the people that are giving us advice.
I think that's such a great point because even the most suitable investment
Right.
can go wrong if it's part of a poorly constructed overall strategy.
Now, sometimes it can feel really intimidating to question a financial professional.
Yeah, I understand that.
They often have so much knowledge and experience. So how can investors make sure that they're asking the right questions without seeming clueless or confrontational?
That's a great question, and I think a lot of people feel that way.
Yeah, it can be intimidating to sort of challenge someone you're trusting with your finances.
Absolutely, but remember, you're the one in charge of your money. And asking questions, it actually shows that you're engaged and that you're taking your investment seriously.
Okay.
So any reputable financial professional should welcome that curiosity and be happy to explain things in a way that you understand.
So what are some tips for asking those questions effectively? How can I sort of get the information I need without, derailing the conversation or putting my advisor on the defensive?
First, don't be afraid to admit if you don't understand something.
Yep.
It's much better to ask than to make a decision based on incomplete information.
Right.
Second, you can frame your questions to kind of seek clarification rather than accusation.
Right.
So instead of saying, why are you recommending this risky investment?
Right.
You could ask, can you help me understand how this investment's risk profile aligns with my overall goals?
So kind of shifting the focus to understanding the rationale
Exactly.
behind the recommendation.
And don't be afraid to ask follow-up questions. If their explanation still doesn't make sense, keep asking until you feel confident that you understand.
So it's about being assertive but respectful.
Right.
I'm ultimately responsible for my financial decisions.
Yes.
But I also need to trust the expertise of the professionals I'm working with.
It is a partnership.
Yeah.
You bring your goals and values to the table.
Right.
They bring their knowledge and experience.
Right.
But ultimately, the final decision rests with you.
This has been a really insightful conversation. We've covered everything from the legal framework of suitability to practical tips for interacting with brokers and advisors. Whether you're working with a traditional broker, a fiduciary advisor, or a call center, I think the key takeaway here is to be an active participant in your financial journey. That's all the time we have for today's deep dive. I want to thank you so much for joining us.
It's been a pleasure.
And for sharing your expertise on this important topic. And to all of you listening out there, stay informed, stay curious, and until next time, happy investing.